Today I wanted to do a brief discussion on the Silver Institute supply and demand figures. They did a great job this year of structuring their results to make everything more clear. They used to only count government bullion in the coins and bars figure, but now those numbers look to include private bullion, which is great because it has allowed for them to get rid of the implied net investment category. In the past, the implied net investment category was their "we don't know where all the silver being produced is going, so let's just toss it all here" category. Now they probably have a pretty good estimate of the overall investment market, which has allowed for a new trend to be defined, which I will go over in a minute. To just talk about this chart briefly, the dark blue area represents all the silver that was pulled out of the ground over the years. Mine production has been growing at a pretty solid linear rate since 2004. The light blue area represents silver scrap recycling. This grew pretty rapidly between 2010 and 2012 as demand for silver was rising. In 2013, that number fell almost 25%, which is interesting because demand rose over 13% from 2012 to 2013. If anybody has any insight on why scrap dropped, I would be curious to hear about it. Perhaps we are running out of cheap, easily recycled scrap material? Certainly a possibility. So back to the chart. The final source of supply is the draining of government stockpiles, and those are almost completely gone, as we can see. So the lines overlaid on the supply area chart represent sources of demand. Industrial fabrication is represented by the black line. Silverware and jewelry are represented as different shades of light green. And finally, the coins and bars figure, which now consumes the equivalent of more than the total silver produced from recycling in government stockpiles. The coins and bars figure shows a demand of approximately 250 ounces in 2013. 100 of those ounces are from the top 5 official coins, as we can see in this chart by Steve St. Angelo. So Canadian 100-ounce bars, and the America the Beautiful 5-ounce coins, the New Zealand Mint, other small government mints, and all the private bullion rounds and bars are represented as the remaining 150 million ounces. This does not factor in investment demand from bullion coins previously minted or produced. So the real investment demand is much higher than this, as previously produced bullion is traded daily at local coin stores and such. But the trend now defined by the Silver Institute are from these figures. These are the net deficit or surplus figures on a yearly basis. If you add these figures up over time, you can see that there is a rather large deficit that is growing. This deficit represents either a source of supply that is growing outside of the Silver Institute's network, or to some degree, a real deficit in supply could be forming. Regardless, these numbers represent what is unknown in supply and demand for the Institute, and it'll be interesting to see if shortages start to occur in the market to confirm a real deficit, but we shall see. So demand and price seem to have a strong correlation. When demand goes up, price follows. When demand goes down, price follows. However, we have yet to see a strong price increase to represent the strong increase in demand that we saw in 2012 to 2013, which has been continuing into 2014. For this reason, I consider this another indicator that the price of silver is going to rise in the near term. As we can see in this chart that I made yesterday, silver should see a rebound to the $25 to $26 area over the next several months, where it will eventually make its way back to the trend line that I have demonstrated in previous videos. Thanks for watching.